Welcome back, guys. Johnny here, and I have another exciting video for you today. Today we're going to talk about Autozone, or ticker symbol AZO. Now I'm going to talk about the statistics using Robinhood as well as Yahoo Finance. We're going to talk about some things about this company as well as their earnings. We're going to look at their max chart over time, their highs and lows. We're going to look at some recent news and future predictions. We're also going to look at their competition and how they compare to their competition, as well as any dividend history they may or may not have. This is all going to be a video to basically summarize why I think it's going to be a strong buy in 2020. So let's go ahead and get started. Now, I did have a request from one of my subscribers and asked his name was BHADZ100, and he asked if I can do an analysis on Autozone. Now, this was over 3 months ago on a video that I did, which was Hartford Financial Service Group, Inc., and why I think it is a strong buy. If you want to check out that video, you can click the little card above. I do apologize that this video is taking a little bit longer to come out. With everything going on in the world, it kind of got put on the back burner, and I've done other videos since then. But let's go ahead and get started on the video. Now, Autozone is at $1,157 currently. They're slightly up $5.30 for the year. In their 5-year chart, they're actually up 69%. For a total growth of $472, which is pretty amazing. They are 50% buy rating right now from analysts, and 990 people on Robinhood own this company. Now, for all of you who don't know what Autozone is, I'm sure most of us do, they engage in the retail and distribution of automotive replacement parts and accessories. Basically, that means the firm offers all data which produces, sells, and maintains diagnostics and repair information software used in automotive repair industries. The CEO is William C. Rhodes. They have 96,000 employees. They were founded in 1979. They're headquartered in Memphis, Tennessee, have a market cap of $27 billion and a PE ratio of 18. And these statistics on Robinhood are pretty much on point with the statistics of Yahoo Finance, which we'll go over in just a minute. Average volume is 177,000. Now, 50% of 22 ratings say it's a buy, the other 50% say it's a hold, and there is no percentage on the sell side. If you want to look at what the bulls say and what the bears say, you can pause this video and you can read through these. But for the most part, I believe it's a company you would want to hold long. Now, their earnings per share looks like is around the $15 mark almost. It looks like about $14.50, which is pretty awesome for their Q3 2020 earnings. Now, their next Q4 earnings will be September 22nd, so I'm looking forward to seeing what that is because they slightly beat their earnings for this past quarter. Now, let's move on to Yahoo Finance. We'll look at some of their statistics. Now, they compare to Robinhood. Their market cap is correct at $27 billion. Their earnings per share is around $64. And their PE ratio is around 18, which is pretty awesome. Now, they do not have a dividend, but that's okay because it shows the growth of the company over time. They reinvest their profits through the company, and maybe they'll pay a dividend someday. Now, as you can see, it looks like they were listed on in the stock market around April 1st, 1991 for a total of $8.06. Now that would have been a pretty amazing time to buy this company, and you could have gotten quite a bit money back off of that $8 investment. And as you can see over time, it has gone up into the 20s and the 30s, and it looks like it hit its first $100 mark right around 2006. And since then, it has been going up in share price ever since. Looks like it peaked at about $800 on the July 2016. It did have a pullback around, it looks like April, May, June, July of 2017, and made a big comeback ever since. And then it had a nice pull up. It looks like December 1st, 2019, it was at 1191 before everything happened in the world today and what everybody's going through. It had a huge decline all the way down to, it looks like, the $728 mark, literally cutting this stock in half, which would have been an amazing buy if people did buy into this company March 16th, 2020. Ever since that date, it has been going up, and that's where we get to the price now of $1,157. Now, recent news for this company comes from Insider Monkey 10 days ago, which would have been on July 8th. Now, this company states that 45 hedge funds that are tracked by Insider Monkey were long on this stock in the second quarter of 2020. That's a 13% change from the previous quarter. Now, this graph here shows the different times of the different quarters and how many hedge funds are bullish on this position over the last 18 months. As you can see, a while back, it looked like in 2000 and I want to say 15. No, that's not correct. Yeah, it looks like that is right. About 2016, they had around 40 and then 45. It looks like it then dropped to around the 30 mark and has been going up ever since the last couple of quarters. So now they're holding at 45 on the total hedge funds. Now, if you look at this, it shows that some of the largest holded positions for AutoZone would be Capital Management, which has $532 million stake in AutoZone, which comprises 4.2 of its 13F portfolio. Now, also Iridian Asset Management has a $166 million holding at 4% of its portfolio, as well as some other professional money managers with similar holding expectations, such as Capital Partners, Citadel Investment Group, and Blue Drive Global Investors all have positions in this company of AutoZone. Now, moving on, some of their competition would be right here. It's going to show the top 5 competitors for AutoZone, and as you can see, AutoZone is actually placed number 1. They have a revenue of $12 billion, 96,000 employees, and a 100 rating for their CEO. Now, as you can see, it blows most of the competitors out of the water. They have a better rating, they have more employees, and they have a higher revenue than all of the other 5 competitors. O'Reilly's would be coming in second, Advanced Auto Parts would be coming in third, Pet Boys would be fourth, US Auto Parts would be fifth, Deltacom would be the 5th one, and Parts Authority would be number 6. Now, this is pretty amazing because there is competition in this industry, but AutoZone seems to be leading the way. And just for another screenshot, that AZO or AutoZone does not have a dividend yield, nor does it have any past history, which means they've never paid a dividend, which could be a good thing and why this company is able to grow so much over time. It also shows me that they didn't release dividends for a while and then cut them and take them away. which is good to know. So, what does this mean for AutoZone? It means that you guys have a good opportunity to get into this company and still make a lot of money in the future. They have strong sales, they have a strong EPS, and a strong PE ratio. And they've been around for quite some time. They're also the leader of their industry at the moment. AutoZone is going to be around for a long time. Cars break down every single day, and they're able to help the customer find what part is needed, as well as offering the part if they have it in stock, and or ordering the part if they don't have it. I've used AutoZone for several years, and I do believe their customer service is there, and their equipment, as well as their parts and accessories for replacement, is also very strong. Now that's why I think AutoZone would be a strong buy in 2020 and beyond. If you guys liked this video, go ahead and smash the like button. And if you haven't subscribed to my channel yet, I love talking about all things investing and finance. I like to do these stock reviews as well as show you what's inside my Robinhood portfolio. So if you do like that kind of stuff, again, subscribe to my channel and click the little bell so you don't miss any of my upcoming videos in the future. Again, have a great day, and we'll talk to you in the next video.